Thursday, January 16th. Is it a week of cock jokes? Week of cock jokes. I mean, if you've tuned in, you've heard about my white cock. I don't know if I should do the full week, but it's Thursday. Full disclosure, yesterday we had an alpha pick. So if you haven't viewed alpha picks, here's the performance. I mean, I grabbed this off the website because I can't show you the website because it keeps refreshing and they don't want me to show the alpha picks. But we had a new alpha pick yesterday. And so Alpha Picks, Seeking Alpha's top stock picks delivered directly to your inbox. The killer is the performance. It's 2 stock picks, one on the 1st of each month, one on the 15th. You buy 1% in your portfolio. So say I put $50,000 into Alpha Picks. I bought $500 worth of this stock yesterday. Okay. And here's the great thing. They tell you when to sell. It's the no-brainer portfolio. And look at the performance. 172% versus the S&P during the same time, up 57%. They've had some absolute killers. They've had SMCI when it was running. They've had AppLovin when it was running. They've had Modine Homes when it was running. They've had a lot of those types of stocks that have been top winners. No, they don't have NVIDIA. No, they don't have Palantir. But they had Meta when it was, at $100 and it ran up. So it's one of these portfolios that is just, you don't have to think about it. And I know you're tuning in to hear about the market on this show. I have this as part of my portfolio. It's not my main portfolio. I have it as part of my portfolio to try and beat the S&P. That's what we're all about. Because if you can't beat the S&P, just buy VOO. Just buy VOO and be happy with it. Just buy QQQ and be happy with it. But if you want to try and beat those, this should be part of your portfolio because it's just like an ETF and it's not, you can consider the fee that they charge. Okay, you save $50 by going to Linktree, linkree./ daily stock pick. It's written out on the screen below. Just type it into your browser. Go and look at it. We were talking about phone service. Visible phone services on here. You get a great phone service for $30 a month. That's beating out. You're paying probably $110 to Verizon for the same exact freaking service that you get for Visible. Oh, and by the way, if you have an Apple Watch, it comes free. The cellular service, if you have the appropriate watch, it comes free included with that service. So go and check that out. Alpha Picks is up here. There's a lot on this page. You can join Webull. We're going to go over all of this because the number one sale and this top one, and I have to update this wording, is Trendspider. Okay. Trendspider is having an absolute killer sale. Killer. This was $900 yesterday for the advanced tier. You're down to $700. Okay, you're down to $64 per month for the next 12 months. And here's why I steer you towards that top one. Okay, we're going to show you charts, but it's because you get unlimited one-on-one training. So say you take 2 courses per month for the next 12 months. Okay, at $64 a month, you're paying $32 per course. Per course. And you're getting training on the top tier tool to start technical training. So technical trading is a skill. You want somebody there to guide you. You can have a product expert with you and handhold you along the way for the next year because it's unlimited one-on-one training for $64 a month. Now you can go down to enhanced if you know what you're doing and you just want one free one-on-one session, go down to enhanced. I would tell you to say, go to the standard. The standard is amazing for $597. Okay? $49 a month. It doesn't come with just upgrade to the enhanced. So these are the two that you want, whether it's $64 or $58 a month. I would tell you, if you plan on taking courses, go to the $64. If you plan on just using the tool, go to the $58. But the $64 gives you so much more. And this is part of the announcement. You're able now to use AI to code your ideas into custom indicators, okay? I'm not a coder. I need to start playing with this. I've thrown out some ideas on this. This is how you get started. You can see, you can build your own freaking indicator in here. Okay, Somebody's going to build an indicator that comes out with a great one. Here's examples. Moving average trend indicator. It tells you, hey, this is the bottom of the trend. Boom, this is the top of the trend with green and red candles. And they give you the prompt, RSI seasonality. They give you the prompt. See that bottom line right there? That tells you, ooh, we've got good seasonality. You may want to buy. Squeeze labels. When it goes into a squeeze, it tells you when it goes into a squeeze with a little bubble. There's a lot to this, but this is part of the free the tool that you're buying into. You also get my 4-hour algorithm. So let's go over to Trendspider and let's look at the algorithm here in QQQ. Okay, has you in at 516. Does that mean we're automatically going up? Nothing has changed on this chart. It's just if you, for some reason, had an alert set up on QQQ, you'd get a text yesterday. Hey, the 4-hour algorithm got me in. Then you can go look at the chart and you can say, we kind of touched that 200-day. Okay, that 200-day right there. If we go to the daily, it touches the 50-day. And we're below that. We went back over it. What has happened the last few times we've gone under the 50-day and reclaimed it? You've continued up. So again, the alerts, you don't have to sit there and stare at charts all day. If we look at the weekly, nothing has changed. It's a little bit stretched, but it's been a little bit stretched all the way since here in November. Where were you trading at November 2023 on the weekly? It was $362 per share. And you can say, well, that's great on QQQ. Look at VOO. This is the S&P 500. This is the equivalent of SPY. It's the same thing, just lower expenses. If you're going to trade options, use SPY. If you're going to just buy something and hold it in your account, use VOO. The MACD, super low. Little indicator right there, just you get an alert. Buy at 544. Told you to buy at 553. Told you to buy at 549. Got you out with losses. Didn't save you much money. This 553, I probably would have bought there if I was buying VOO. And the reason is because we had the 9-day. And I would have said, you know what? We're continuing up. I'd have made that mistake. But I don't use this to actually trade these ETFs. I want to buy and hold these ETFs. And that's the deal, is I'm not looking to actually make money on these things, even though over the last 24 months, okay, on VOO, there are 19 positions. 68% have won. Okay, 19 positions. Your average win is 3.52%. The issue is some of these just haven't worked out, but they've gotten you in and out with tight candles and tight stops. So that's the deal. I do think 19 positions, you get an alert. Of course, now during this downturn, we've had this, but you're under the 50-day. And if you go and look at the daily on this one, you can see we're going to most likely regain in the S&P 500 the 50-day. And what has happened when we've dipped on the daily in the 50-day? You've seen it come back up. There is nothing in the economy right now that is screaming, oh my God, it's bad. Look at the earnings. We're going to go over bank earnings. They continue to kill it. So again, Alpha Picks is the portfolio. Trendspider is the thing. And yesterday, for any Seinfeld fans that know about Kenny Rogers Roasters, it was green yesterday. Kramer, what's going on in there? Core inflation, Jerry, core inflation. I thought that was pretty good. I'm a Seinfeld fan, so an Uber one. The top AI stocks for 2025. Steve Cress did a podcast yesterday, and it's a video podcast. You can watch it. I would suggest anybody with Seeking Alpha go and get this and watch it. Because if you watch Steve Cress, he guides you through how to use the platform. He's not using a slideshow to just show you the top 2025 AI stocks. He shows you on Seeking Alpha how he used it to determine these top stocks. And he has a pretty freaking good track record. I mean, let's be honest. The guy for top 2023 and top 2024 stocks, he picked out, they each individually were up over 140% if you just bought all 10. And we just got the top 2025 stocks, so you can watch that. So again, one of the things that he pointed out in one of his other videos is this stock screener. Okay, you go over to stock screeners, and then you go over to the stocks by quant, and he tells you, hey, this is one of his favorite screeners. Well, we can go and edit these filters, okay? It's just the quant. It's just the quant. He's got it. Energy, materials, industrial, blah, blah, blah. He's got all of that. If you go to advanced features, like for instance, I am a fan of market cap, large cap. So I pick market cap because I want to do that. You can do quant factor grades. You can do trading. You can do dividends. You can do earnings. You can do valuation with PE and PEG ratio. You can do growth. You can do performance. You could do 1 month performance. You could say, hey, if it's down in the last couple of months, I want to buy it because I think it comes back. You can do momentum, the last price versus the 10-day SMA. You can do all of this, profitability. And then we pick done. And what I like to do is I like to move this up to say let's just say 400 billion. Okay, a $400 billion market cap or higher. Well, Taiwan Semi's your top one. Berkshire's your second. So let's move it down a little bit, because if we go to 300 billion, then you've got Tesla in here and NVIDIA and Amazon and Google and Meta, and it ranks them by the quant. Okay, let's move it down to 200, because 200 starts to get interesting, because you get T-Mobile, Wells Fargo, AstraZeneca, Pepsi. You get others in there. Again, Taiwan Semi is the top one. Then you go to 100 million, and it gets really interesting, because one of the top stock picks that I was thinking about for my own personal top 20 is HSBC. I was thinking about this one. Look at that. Strong buy on the quant. All of the factor valuations are really good. You go and look at Wall Street. They've got a $58 price target on it. Okay, 16% upside from where you are now. That'd be a pretty good year after a few, we can go and look at the 1 year performance of this one, up 31%. The 5 year performance up 30%. Just kind of moved a little bit. But it's only got a $173 billion market cap. It's a smaller bank. So I again, read the virtual analyst report. All of that with Seeking Alpha Premium, I like it. Now, if I were to use the quant, this is pictures of where everybody started. Look at Apple. Look at Google, look at Amazon, Harley Davidson, then you had Disney in the little shed. And then you have probably one of the greatest companies ever. It's a latex industry. They hire the unemployed. Vandalay Industry. Again, insider Seinfeld will get it. But Vandalay Industry, how it all started. That's a great episode if you haven't seen it. But yeah, I was posting that stuff. Now, Tom Lee, he said there's an 80% chance that the S&P is up double digits this year, 80% chance. And he used logic and kind of just history and numbers. He goes back and says, yeah, because the first 5 days are up, because of January's up, blah, blah, blah. He goes over everything. It is literally just a 28-second video. You can take 28 seconds out of your day. And if you don't believe me that we should be bullish, again, we have a lot of catalysts coming up. We got a president coming into office next week who may immediately throw up tariffs. We have the the war in Ukraine. We have the External Revenue Service. We have him potentially doing something with Bitcoin next week. So you've got a ton of catalysts next week that could either take you up or down. Just be in the market. Just be in the market when Tom tells you stuff like that. Now, Rigetti, Rigetti Computing CEO, Chief Executive Officer, Subdu Kulkarni, I think is his name, in an interview with Yahoo Finance said, we need to tamp down expectations amid the surge in share prices in recent weeks. Rigetti said, the stock said, hold my beer. It was up 22% yesterday. This was at 11:19 a.m. and the stock continued up. Again, he's saying tamp it down a little bit. And Rigetti is a strong buy in the quant. Again, the market had a midday pullback, which was good. My personal opinion, I think we see some lower numbers. And the only reason I say that, I think you're going to get some better entries, but I'm not pulling anything out right now I'm simply taking the money that I had from my sale of Apple and other stocks in late December, and I'm starting to add it back in. I'm not going balls deep. I'm sticking the tip in, and I'm just going in. But I do think we may have lower entries. And I think next week will determine that. If Trump starts putting tariffs way on, there's a surgical approach that they're talking about. I don't trust that it's not going to come out over the weekend or something like that, that bad news or whatever. But there's going to be something that hits us. Remember, the Fed did come out and said, we're not getting rate cuts. There's still rate cuts that's factored in. And how do I know that? Take a look at the weekly charts. I mean, the weekly charts are still back to where it was in March of 2024 when the, with the MACD and the RSI. Now, the market was trading, the VOO was trading at 474. We're at 545. So you've just had this sideways on the indicators while the stock prices have gone up. It didn't feel good in August buying back at 470 when it tipped down there, but it was good. So it's a buy the dip. So you don't want to ignore the dip, but I don't think that you go in balls deep. I think you take just like a surgical approach to the to the tariffs. I think you take a surgical approach. The one where I would go balls deep if you have nothing in there is Bitcoin. Bitcoin. I think Bitcoin is there was a guy on yesterday who's the old CEO of TD Ameritrade, I think, on CNBC that I saw. And he said, I'm bullish for the economy because we've now got growth people in office. And I think that's going to be pushed. And the one thing that he knew, he said, I know Donald Trump. He wants to base his presidency on the stock market. If you don't think the stock market is going to go up, you're crazy. But so, yeah, he wants to go balls deep into the stock market. But he said, the other thing is, everyone that he has appointed or put in his cabinet or has around him is a crypto bull. And if you don't think that crypto's going to go a little bit wild, I do have some theories about crypto. I've been loading on IBIT. I bought MSTX yesterday. Okay, I'm sitting there holding it. I don't even know if I'm up or not. I bought it on Webull live on the air. If you were on YouTube. I don't even know what I paid, but let's see. MSTX, I'm up 1.76%. So I bought $1,500 worth. So it's like $25. I think at the high yesterday, I was up like $100, up almost 10%. But I do believe in it. I don't have a fear of buying MSTX. If it loses, 5-10%, maybe I'll get out of it and I can get back in. It's a trade. But for buy and hold, I'm using IBIT. So I like it. And with some quantum stocks, I'm just telling you, Rigetti Computing is one of the top ones. You've got a top here at 19 and it's trading at $10. Let's see, in pre-market, it's at $10.37. Doesn't mean it can't come back to 2. They're not making money. This one, you can see the MACD reset, the RSI went down. It's just going to pop. But I think you're going to see lower highs and lower lows as we start to trend down. The trend has changed on this one. Now, if you go and look at a weekly, we're still overbought. We're still overbought. The RSI came off of 97. It's a 0 to 100 indicator, and it's considered oversold at 70. And this went to 97 just 2 weeks ago when the stock was trading at $20.37. So I do think that, I think he's right, just tamping it down. If you want to get into quantum computing, there's a couple that actually are in it that make money, Google and IBM. So I think those are safer. But if you want to trade it, go and trade it. Now, this article was interesting because is there a super cycle coming for Nat Gas? And they're saying Devon Energy and EQT, this is from Bernstein, are the top 2. I had Devon Energy in the core portfolio. It got taken out. And the reason it got taken out, because the stock just basically did nothing. You could buy it under 40, in the 40s, and it would pop to 50s. And we can go back and look at the weekly. Look at that. Would you want to buy into this? Well, recently you have wanted to buy into this. The algorithm got you in at 31. Okay, the algorithm got you in at 31. Everything pointed towards, hey, this might be the top one. Because Devon was actually just oversold. If you look at it, it was just oversold. Now it's a hold in the quant. It's not a sell. It's a hold. Wall Street says it's a buy. They have a $49 price target on it, which is 28% upside. Now they've chased it down. I wouldn't necessarily trust that one, but the profitability on this is just unbelievable. And it's a good company. Now it does pay a dividend. Let's see what the forward yield is. 3.77. This was up near like 7-8%. It's an energy company, so it was putting it off. We can go look at EQT, which is another one that's really good. Their dividend, I think it's like 7%. I'm sorry, that may be a different one. That may be ET. But this one is 1.2%. And let's see, Wall Street says it's worth $50. I'd rather have Devon. Honestly, I'd rather have Devon. But this one's natural gas. Again, if it's going to take off, it's going to take off. Devon might be the opportunity there. But EQT and Devon, if there's a natural gas super cycle and that starts to ramp up, I do think you're going to specifically see U.S. cheap natural gas being sold to Europe. I think Trump is going to basically try and get Europe to switch over to U.S. natural gas, even though it's going to cost more, by saying you're funding the Ukrainian war by buying Russian natural gas. That's essentially what they're doing. So I think Trump is going to be big on that one. I think it's a good one. Now, remember Hindenburg Research? This is interesting because they're the ones who called out, I think, SMCI, Roblox, Carvana. They called out a bunch. They're going under. And maybe, here the Seeking Alpha users give their opinion on this one, but maybe it's because of stuff like this. This is where they shorted Roblox. Hindenburg Research shorts Roblox, alleged inflated metrics at $35. Where are you trading today? $63. And you know what? Roblox is in the core portfolio. It's in the core portfolio right here. And the algorithm has gotten you in at 40, gotten you in at 52, gotten you in at 61. It's made you some pretty good stuff since that short report came out. But they're going under. Again, Roblox, I think Roblox is a great play. I don't know that I'd pay for it up here. It's a little bit outstretched. This weekly chart right here, where you see the channel forming, that's where I felt comfortable trading it. Up here, I don't feel comfortable trading it up here. It's a little bit extended in my opinion. We can go and look at it. Roblox, Wall Street says it's worth $58. That's 9% down. The valuation, crazy, because they're not making money. The quant says it's a hold. Their growth is unbelievable, though. 27% year-over-year growth. Again, this is entertainment, home entertainment. If you wanted to buy something, there's Take-Two software, there's C Limited, and there's Douyu up above them in the quant. You can look at those types of things. But again, Roblox, Hindenburg Research, I never paid attention to short sellers. I always thought it was buy the dip because any reaction in the market is an overreaction. That's one of them. Now, is Reddit taking off? Reddit with a similar vibe to Robinhood before the breakout. Recent leaders pushing sideways. You can see, you can't see it down here. I'd have to bring it up. But trust me, there's a squeeze going on with Reddit. Okay, there's an 821 EMA cloud. There's an earnings gap. This is similar to Robinhood. And what did Robinhood do? We can take a look at Robinhood. Robinhood has soared up. Look at that. Okay, Robinhood has just gone up. Now, if we look at Reddit, is this similar? Remember, Reddit was an IPO, so we don't have a great weekly chart. But this one, the algorithm got you in right here at $60 on September 11th, got you in at 172% gain, got you out on this one. And it seems to be just capitulating right here. So it's interesting. Again, the MACD's resetting. The weekly on Reddit is not going to give you much information. It's just going to tell you it's a little bit stretched. But I think the 4-hour gives you a great opportunity to trade it. Now, here in Seeking Alpha, we can go and look at Reddit. Let's look at Reddit. It's not covered by the quant. Wall Street says it's a buy. It's at 171 point. It's trading right at the Wall Street level. The valuation, they're not making money. I mean, that's part of the problem is they're just not making money. So you can't look at it, but their growth is great. I mean, their growth revenue year over year, 48%. That's what made it just shoot up. So is it coming out there? From a chart standpoint, I think it might. Now, I am a big large cap tech guy. So Oppenheimer came out with their top chip stocks for 2025, Broadcom, Marvell, and NVIDIA. Okay, they also came out with monolithic power. They give you the reasons why. I own NVIDIA and Broadcom. Marvell, I don't own. I own NVIDIA and Broadcom. Marvell has been a good chip stock. Look at that. It got you in at 73 right there, October 4th. Okay, you're trading at 117. At 117. The MACD has reset. The RSI has just gone sideways. Again, I like this one. If we go and look at Marvell, I have done plenty of looks at AVGO and NVIDIA. Those are two buy and holds for me. There's no reason to trade those ones. I think both, are Broadcom's a little bit overextended, but if the likes of Apple, Google, and Meta start making their own chips, and it's through Broadcom, I think they've got years to come on this one. If you look at just Marvell, it's an F-in valuation. Wall Street says it's worth 126. It's trading at 117. So again, those are top picks. Now, if you want to know why chips are top picks, Taiwan Semi killed it. Q4 revenue soars. AI outlook remains upbeat. It's up 6%. Okay, it's a strong buy in the quant. If we go and look at the quant rating, it's been a strong buy since 197, under 200. It was a strong buy way down here at 160s, 170s, 160 in July. It was a strong buy here at 170. Again, you can trade this, and if you want to trade it, you just go over to the 4-hour algorithm in Trendspider. And Taiwan Semi here, you've been trading it this whole time. It's been a little bit sideways. That 185 was support. So if you bought here at 200, or you were lucky enough to get in under 200, I don't know if you'll ever get it under 200 again. It's at 220 to have to drop 10% for you to get it. But that would be on sale. Again, from a quant perspective, it's super, super good. You look at the growth, 22% revenue year over year, 14% going forward. You look at their profitability, they're making 54%, but then you look at the return on capital and stuff, it's all A's. You look at the momentum, it's fantastic. 3 months up 10%, 6 months up 11%, 1 year up 104%. Revisions, nobody's bringing shit down. And if we go to the Wall Street ratings where it has a strong buy, there's 17 analysts that cover this. So it's not a minor coverage. So they killed it. That's why you want to be in chip stocks. Pick which ones you want. Taiwan Semi makes all the chips. So, we went over ASML. They're the ones who provide all the chip equipment to Taiwan Semi. Now, Bank of America issues 2025 guidance in Q4B. It was good. And let's go look at Bank of America, because Bank of America is in the core portfolio. It's down 0.11. But why? Well, look. Look at that. That right there is, I think that's a nice, yeah. See where it's going to? Do you see it? Recognize any tops right there? If you've been listening to me for any period of time, then you know this is going to be a test. That's going to be a test. And the MACD, super high. The RSI, overbought. So that's going to be a test. Until you can break through that, that's going to be a test. And people will start selling around these price points. Even though they killed it on earnings, that's going to be a test. And it's not because Bank of America is super expensive. The valuation's a little crazy, but they showed on earnings. They can make it grow. Look at the growth. It's a B, the earnings per share long-term growth, 3 to 5 year CAGR. It's super, super high. That's a good thing. Dividend per share growth, 8.34%. 1 year dividend growth rate of 8%. That's really, really good. And the revisions, everybody's bringing it up. There's only a few that are bringing it down. But when you go and you look at Wall Street, they say it's a $50 stock, which is 7% above where it's trading now. But again, when you go and look at the chart, that's going to be tough to get through, especially when you have an extended MACD, when you have an extended RSI. So do I expect this one to pull back to 45? Probably at some point. Is it a buy? Yeah, because it will break through that. So I like it. I don't love it. I like it. I own it. I've owned this one since 20. Since 20. I mean, this was when this was trading in this area down here at under $30. That was when to buy this. And I was pounding the table this entire time. This is the largest bank in America. Too big to fail. It's going to happen. Now we have an administration that's going. If you don't think that banks will immediately just go through all of this, Trump is going to lower regulation. It's just as if you have any friend who's in the banking industry, ask them how much they spend on regulation. There are thousands of employees just to abide by regulations. Thousands. Imagine the savings of those people if Bank of America can all of a sudden just say, you know what? We don't need all these people. And boom, they make money. It's horrible for the people, but that's what's going to happen. And so you can see it. Morgan Stanley, they beat. Well, let's go back. Morgan Stanley Q4 beats. Robust growth above the board. They're up 2%. We can go and look at the chart of Morgan Stanley. Are they nearing their highs as well? I think they got past it. We can go over to the weekly. Yeah, they got past it. So now at 132, you're going to use that 109 as support. And if we go and look at Morgan Stanley, it's a hold. If we go and say Wall Street says it's worth 130. So when Bank of America, Wall Street says it's worth 50 and it's not there, I think you could buy. I just don't know when it's going to get up there, but it's probably going to be up there. And they killed it. Now, I used to own Morgan Stanley. I don't own it now. But one that used to be in the core portfolio is Target. Target gains after topping holiday sales expectations back. This one, I sold it. I'm glad I sold it because it's done nothing. It's done literally nothing. I never wanted to own this. I owned this one for quite a while. I should have sold it at the 170 mark. I mean, if we can take a look at this, this is a stock chart that, yes, I held on to this one too long. I switched from shopping at Target to shopping at Walmart. And that should have been my 100% just, hey, okay, I'm done. But you can see it hasn't gotten above this 181. It was trading at 270. I bought it back here in March of 2020 at around $100. Okay, I should have sold it at 270 up there with that double top where it got to all-time highs, or even at this 251. I wound up selling at about $180. Okay, I saw these types of things and I said, I don't want to hold it through this. I'm just going to sell it. And so you can see once, twice, 3 times, 4 times, 180. It'll get back up to that 180. It will. Is it going to get there soon? No. I don't shop there anymore. I don't want to own it. I own Walmart. And let's go take a look at the Walmart chart. This is how you evaluate the stocks in your portfolio. Go to a weekly chart and say, is it gaining? If not, maybe you want to find a way out, an exit plan. But I switched from shopping at Target to shopping at Walmart. That was my way of knowing when to get out. Now, United Healthcare, this is the one that's weighing on the Dow. United Healthcare is down 1.97. We can go and look at the chart on this one. They post a rare quarterly miss. Wall Street says it's a strong buy. Wall Street says it's worth $639. They haven't brought their price target down, even though the stock has dipped. I continue to say anything near $500. If you think this is something that you want in your portfolio, I don't think it's a bad buy. Largest health insurer in America. Medicare will not run without UNH. This was in the core portfolio. I took it out of the core portfolio when we started seeing the Save Luigi campaign. I just didn't want to be in it. My parents got screwed over by United Healthcare with their AT&T insurance this past November and December with their signups. They kind of squeezed this shady stuff in, and I just didn't trust the stock, and it felt like greedy and just creepy to me. So, but if you get near $500, I think you buy it. The reason? Because we just saw that Medicare is going to increase their reimbursements. Now, is there something that goes on with this? You know Congress ain't going to do shit. You know they're not going to do anything. They're going to sit there and do nothing. So in the meantime, you can buy it between 450 and 550, and you can probably just trade it. Look at how the MACD is reset on the weekly and the RSI is down at 46. It's hated. It's absolutely hated. But if you go over here and you look at Wall Street, they say buy it. Now the valuation is still extended. It's super high, but the PEG ratio is not. Their forward growth is going to be still good because they're going to grow their revenue year over year. They'll get through this. It's just going to be one of those things that they have to get through. So, yeah, that's it. I mean, again, that's it for today. I do think that we continue. You continue to see this sideways trade. I think this is the volatility that we saw. I mean, you can keep track of the VIX on Seeking Alpha. If we go to look at the VIX, I think this wants to live around 20, and it's at 16. It's at 16. So I do think we see more volatility. If you go to the market data and you go and look at bonds, that 10-year right here, it wants to be closer to 5. It's at 4.67. The 52-week range, 3.62 to 4.81. I mean, you can track it on a chart right here. You can track it. When it goes down, we're seeing great returns in the stock market. As it goes up, we're not seeing great returns in the stock market. This is going to be your key. I think it wants to be closer to 5. As you start to see this one fall, you can start. I mean, you could track the U.S. 10-year Treasury. Let me see. Can I track it on here? 10-year. Let's see. There is a way. 10-year bond. I guess I can't. There is a way to do it. I think it might be the tilde thing. 10-year. Now, there's a way to do it on here, and I'm sure there's an ETF, but you can track it in here. You can just do it. I mean, again, those are the two things you want to watch: the 10-year and the VIX, because those will tell you exactly where the market's going. Now, will the VIX go down to 10 before, if I had to make a guess, will the VIX touch 10 or will it touch 20? Because it's at 16. It's almost in the middle. I think we go to 20 before we go to 10. I just think, inflation and everything like that is not out of the system. And so the don't fight the Fed doesn't mean you get out of the market. It just means, hey, you might have a better opportunity. Look at that. I mean, this is the 5-day. It's come down. And we had the greatest day since the election yesterday. So tamper your expectations. Yesterdays don't happen. You want to be in the market when they do, but you want to make sure that you're getting into the market at good times. And Q's just gave you an entrance today. Am I throwing my 500 the 6 figures that I have in cash into the market now? No, I'm going to throw low 6 figures in there every now and then. I got a lot of money sitting on the sidelines, but it is what it is. So if you have any questions, again, Trendspider sale is going on. Don't miss this one. It looks like it lasts for 4 days this time, but do not sit on it and wait. Start getting your training on this. We're going to see volatility. You want a charting program. You want alerts so you're not sitting there looking at charts. You want to be able to scan the market. This is the best thing. And learn to use AI coding. It's just English language. And that's what I love about Trendspider is you just use the English language. It's not like TradingView where you need to be a programmer to do it. So if you have any questions, hit me up. Again, over on Linktree. My email address is right there, or you can hit me up on any of the socials. Okay, take care.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.